Hi, Assalamualaikum warahmatullah. My name is Ezrin. Today I'm going to explain to you about the cost accounting technique, that is your marginal costing and absorption costing. Marginal costing is sometimes known as variable costing. Absorption and marginal costing are the costing techniques that are commonly used to determine the product cost, value of inventory, and reporting profit in a manufacturing firm. So absorption costing technique is used for external reporting purposes, and the variable costing technique is normally used for internal reporting purposes. As the financial and management information is used by external and internal party, how the information is being analyzed and reported will be different. What are the distinguishing features between these two techniques? If you look here, under absorption costing, it does not distinguish or separate the production cost into variable cost or fixed cost. Whereas under marginal costing, it distinguishes the production cost into variable portion and fixed portion. With regard to that, the production cost, therefore the product cost, for absorption costing will be based on the full production cost. Full production cost meaning the combination of variable cost and fixed cost element. So these two costs will be charged into the production unit. Whereas for the marginal costing, only the variable production cost element will be charged into the production unit. Accordingly, the inventory valuation for absorption costing, inventory will be valued at the full production cost. For the marginal costing, inventory will only be valued at the variable production cost. So what about the application or the suitability of these techniques? For absorption costing, normally it is being used for the long-term planning where all costs may change and thus relevant for decision making. For the marginal costing, normally it is being used for short-term planning because the fixed cost element is assumed to be constant in the short run and therefore need to be separated from the variable cost element. So different technique will charge different production costs to products. Therefore, this will result in a different inventory valuation in case there are unsold goods and will then lead to a difference in the cost of goods sold as well as the net profit. So the effect of these differences will be shown in the comparison in the statement of profit or loss prepared under both techniques. Okay, if you look here, the comparison of the two statements of profit or loss. Under marginal costing, you prepare the statement of profit or loss. Normally, you will start with your sales. Okay, you start with your sales, less your cost of goods sold. But if you are using the marginal costing technique, you will just take the portion of the variable cost. So your cost of goods sold will only consist of the variable element. That means your opening stock or at your production less your closing stock, only the variable cost element. Next, less your non-production variable overhead cost. That includes your variable selling overhead, your variable admin overhead, other overhead costs besides your production cost, but the variable elements only. So that gives you a contribution. Next, you less all your fixed costs, fixed production, fixed selling, fixed admin, gives you a net profit, or if the figure is negative, you will arrive at net loss. As for the absorption costing technique, you prepare the statement of profit or loss. You start with your sales, less your cost of goods sold, but here your cost of goods sold will consist of your full cost. Full cost meaning your variable portion as well as your fixed portion. Fixed cost means fixed production cost and variable production cost. Next, add your production or purchases, less your closing stock gives you your gross profit. Less your expenses, that is your non-production cost, including your selling, admin, all your other non-production costs, your financial overheads, that will give you unadjusted net profit or net loss if it is a negative figure. And then you have to do some adjustments for over or under recovery of your overhead. This is only applicable to your absorption costing technique. Okay, after you adjust for that, you will arrive at the adjusted net profit or loss. Thank you.